So you can become a landlord for $100. I mean, that's what the headlines are saying. The other headlines are saying that the best opportunities since 2008 are here. So if you get my Saturday blog, I went on a little bit of a rant about this weekend because there's a lot of conversation right now because, as you can imagine, with interest rates rising, just ignore February. It's like the shortest month of the year. It's already almost gone. I want to just ignore that it happened because January was on such a great trajectory. And then February happened, and it did. We had the jobs report. We had unemployment go even lower back to 1969. We had the CPI report came out okay, not great. And then the PCE report came out with a higher than expected core. All of these things rippled us from a 5.99 30-year fixed interest rate up to like a 6.875, right under 7. And we're talking about national averages here. Mind you, those rates come with discount points. So the rates were even realistically higher than that. So all of that happened in February. And then these articles start coming out, right? About what is Grant Cardone doing? And you're going to have to forgive me. My words are not forming this morning. And sometimes you just got to be real. And that's where I'm at this morning. Not enough coffee. So when we're talking about Grant Cardone coming out, talking about investing in his Cardone capital, and then you see Jeff Bezos come out, which I've got to admit is a highly respectable human. So when I see everything that he's done with Amazon, and he hasn't gone off the rails and bought something like Twitter, he's certainly staying within his lane. He's become a large investor in Arrived Homes. So their whole principle is you can become a landlord for as little as $100. So what they do is they go out looking for a home. They find them theoretically through internet, through the calculations. See, this is the beginning of it. They start out with computer models in Arrived Homes, but then they go and take it to the street with real estate agents. And those real estate agents are doing additional checks to determine the neighborhood, the street, the actual home, which I actually really like because I can go back and forth and talk about Zillow and Open Door and all the things. That's not this talk. But they go in there and they find these homes that they believe are going to have the most opportunity for increase in value and cash flow. And then they're going to offer it in a bidding type situation that says this home is live, you can invest for as little as $100 and become a landlord. I had a great conversation with a real estate agent just yesterday who's a little over 40 years old, starting his family, and he has some decent investments in things such as this. Now, more local, but where he has a percentage of ownership, a small percentage of ownership, in something that's larger, where they bought a multitude of homes and they're doing scrapes and they're doing development and all the thing. And when push came to shove, and we talked about the opportunities that his shares in this investment gave him, they gave him the opportunity to cash out. That's it, right? So if you buy a percentage and you become a landlord for $100, you have opportunity to the appreciation of these homes. And they go into this article talking about how the historic value of homes is between 5 and 12%, and you can get into this with less risk in the stock market. Now, don't get me wrong. Like, I'm a believer in the real estate market. It is what we talk about all the time. But is that really the best way to go about it? Now, if all I have is $100 or $1,000 and I've got to determine whether or not I'm putting it in the stock market or in a REIT, a real estate investment trust, or something like Arrived Homes, I might decide that the REIT is where I want to put my money, or something like Arrived is where I want to put my money, or something where the conversation that we had yesterday, where I could become a small percentage owner for a small amount of money, and I could take part in somebody else's vision of buying all of these homes and scraping them and flipping them and revitalizing this area. I mean, that's got merit, right? But is it options? So I don't want to discount those options and say investing in some sort of a fund is a no-go. Investing in some sort of a fund makes sense to be able to put your money into something and allow it to grow, but it doesn't give you options. So I want to back into that because right now, while interest rates are getting higher, and I think that they're stable for a moment, we could have some really good CPI or inflation reports in March. They could get worse again in April. They could get better and start trending better in May. That's the talk of the town. But if that is the case, we still have volatility. That's the bottom line. Whether or not it gets better in March and gets worse in April and gets better again in May, or it doesn't, and it does exactly the opposite because we're all expecting it to do one thing. If that happens, bottom line is volatility. Bottom line is we haven't arrived at the lowest interest rates we've ever seen, and we very well might not. But we still expect interest rates to go lower. So there's a lot of buyers sitting on the sidelines waiting for that to happen, which when that happens, and when we finally get a slowdown and consumers stop spending, and we see the recession coming, and inflation does drop, and interest rates drop with it, we are going to see more demand come on the market, and we're going to see home prices go up. So to say that right now you have the opportunity, maybe the best opportunity since 2008, I don't know that I'm going to debate that. I'm going to look at that and go, yes. So right now, while interest rates are higher, I have the best opportunity since 2008. Then what am I doing taking money that could buy me my own home and in giving it to an investment where I can have a share of opportunity? Again, if I have $1,000, maybe I'm looking at that. If I have $10,000, $15,000, maybe I'm getting creative. Even with $1,000, if I'm willing to do down payment assistance, I could move into it as a primary home, even with $1,000, especially if I was willing to purchase a home that had some upside potential, meaning maybe right now it doesn't. So right now it doesn't have curb appeal. So right now, maybe I can get that home where the seller pays for all my closing costs, down payment assistance pays for my down payment. I can get in for $1,000 and allow long-term that property to go up. It is about having a good team. It is about having a lender that knows how to be strategic with your loan options. It's about having a good real estate agent that knows the areas that have the upside potential, that maybe even have money being poured into it from a government, a county, a city perspective, or maybe just knows of a development or even just the stability of the neighborhood. You don't want to just go buy anything. You want to buy strategically. And especially if you can buy strategically on something that needs some love, you might be able to have the opportunity to get in with very little down. Back to the point. Because ultimately what I was just talking about was doors opening to the opportunity of options. Real estate, if I take that $1,000 and I invest it in either Bezos's deal or in Cardone's deal or something else, then at the end of 5 years, I have more cash for that $1,000. Maybe I have $5,000. Maybe I've multiplied it by 5. That would be ridiculous, especially in 5 years. It's not going to happen. But let's just say it does. Instead, what if I were able to use something like down payment assistance and get into a single family home at a 3.6% appreciation? Here's a statistic that you need to know. If you purchase a $550,000 home, median-sized home, and that home appreciates at 3.6%, which is in fact the historic, we're talking about these numbers all the way up to 15%. Really, the historic average is 3.6, so let's be a little realistic about it. If I look at the historic average of 3.6, and I have a 6 or 6.5% interest rate, if I have principal reduction, I have tenants paying down my mortgage, or even me, I'm paying down my mortgage, I'm moving into it as a primary home, down payment assistance, maybe I'm renting out the rooms, maybe I'm renting out a basement, maybe I'm renting out the auxiliary dwelling unit in the backyard or the garage or whatever. I'm looking for opportunities for cash flow. I've got people sending me, what do you think of this investment? What do you think of this investment? All day long. And I love it because some of you are finding some amazing deals right here in Denver, right now with our home prices, And right now with our interest rates, you have to think outside the box and get creative. So if I buy that mid-low 500s home with a 3.6% appreciation and principal reduction and the growth of that home, I could end up in 5 years with $150,000 of net wealth development. $150,000. That's because of the power of leverage. And that's because you own that home. Trade that for the $1,000 that you can give Cardone and just pray that you get $5,000 back at the end of 5 years. I don't know. Which one do you want? Because I also want the options that come with owning the real estate. I want to be able to sell it if I have to in a case of emergency. Yes, I might have tax hit if I've converted it to an investment. If it's still a primary or if it's been a primary 2 out of the last 5 years, I wouldn't have a tax hit. But even if I did, I might have to pay the capital gains. If I have like a medical emergency or some sort of life event where I got to pull that money out, I can do it. I can sell it and I can get the cash out. Or I can do a cash out refinance up to 75 to 80% loan to value. And I can pull that money out with no tax hit. That is not a taxable event. The tenants will pay down my mortgage again. Or I can simply live off of the cash flow and the tax deductions that real estate gives me. But you want to be smart about it. You don't want to just go buy anything because it's real estate. There are certain types of real estate that don't appreciate as well. There are certain areas where you buy real estate that might not appreciate as well. Or maybe there's even certain metros that don't give you appreciation, give you cash flow, or don't give you cash flow and give you appreciation. The strategy that's best for you is not the one that's being sold, but the one that's being designed by you, sitting down one-on-one and figuring this out. If I could sit down one-on-one with every single person, I'd do it because that is what brings me joy. When we were sitting down yesterday going through the current investments versus the opportunity to cash out those investments and gather up the monies that he and his family had and put it into that next property, when we were doing that, one of the things he said was, I know you're busy. I know. I'm busy doing this. I mean, like, I'm not busy because this is what I'm busy doing. This is the joy. Your best strategy is not the one that's being sold. It's not Grant Cardone, and it's not even Jeff Bezos. Although, look at them, assess them. If you have a little bit of money, literally if you have $100, maybe that's where you put it. But if you have over $1,000, consider buying the real deal, real estate, because real estate isn't about the money, it's about options. I hope you guys have an awesome rest of your week. Take care. Give me a call. Set up that time. Let's do the thing. Let's set up your strategy. Bye.